Thank you very much. It's a pleasure to be here. I'm going to present half of this, the boring corporate bit, and then the exciting exploration bit will be from our CEO, Paul Fink. Basically, ADX is an Australian listed company that's been focused mostly in the Mediterranean over the last 5 or 6 years. We're moving onshore. We're moving more and more towards cash flow. And we're moving more and more towards rapid development. A couple of disclaimer notices that you can read at your own in your own time frame. But effectively, historically we've been focused offshore Tunisia and offshore Italy. Large resources, but in offshore, and the time frame between appraisal and development tends to be fairly long. We had a very good run with an asset called Nilda, which is an offshore oil redevelopment project that we were generating a lot of interest in the company. Late last year, we were able to secure a €21 million farm-in. And this is to redevelop an oil field that was previously in production in the 80s that was held by Agip and Shell. Now this is a field where from one well they produced 10,000 barrels a day for 6 years. We went in, we got an independent contingent resource of 30 million barrels from ERCE. We also managed to get a lease facility to redevelop this. And a farm-in, and then in February 2019, the Italian government imposed an 18-month moratorium. So that slowed us up significantly. In Tunisia, we've got a very large resource, about 120 million barrels independently assessed. But again, it's a large project, very capital intensive, and we found it difficult to get that moving. In between time, we've been successful drilling a well onshore Romania. We've come up with a contingent resource of around 20 BCF of gas, and 20 BCF of gas looks like around 30 to 50 million US of MPV. So we're now in a process where we plan to test the well in the next 2 to 3 months. If that testing is successful, look to build a pipeline to tie it in. Another very important element of our progress is the acquisition of a onshore oil field in Austria, and with that comes also a very privileged exploration position that Paul Fink will explain to you very briefly. So what we've done in Romania, we've had a large 1,000 square kilometre licence there for nearly 4 or 5 years. Our partner there was actually a company called RAG. They got out of the E&P business. We brought another company in to share the exploration risk with us and provide funding. We've also acquired a production licence at 100%, and the drilling of that well has been funded by a group who you'd probably know, AIM-listed company called Rebold Resources. So we drilled the well, and effectively what we've come up with is 3 nice gas sands. Those gas sands amount to about 20 BCF of gas, but we see further potential. We're shooting more 3D there in the next 2 to 3 months, and then we hope to actually demonstrate that there's a large stratigraphic upside which could possibly double that potential. So we're planning to test this well within the next 3 months, and if that goes well, as I said, we'll hopefully get into the development of that resource. I'd like to talk about what we have acquired in Austria. On the 2nd of July, we acquired a field called the Zisador field. It's around 20 kilometres to the west of Vienna. It's a field that's producing 350 barrels a day. For that, we paid €4 million on the 1st of January. By the time transfers occur middle of November, we will have bought this asset for around €2.3 million because we'll get all the production of about 1.7 million after tax from RAG. Now, we bought about 1 million barrels of oil in the ground for about 2.3 million euros. What's exciting about this is there's also deeper potential. What you've got here is a multi-layered reservoir, but below that you've got quite a massive Cretaceous reservoir that's already producing, where there's a lot of contingent resource upside. So we see around 8.5 million barrels of oil underlying what you've got is a very boutique oil field that's been very well maintained, has got a life of around 14 years and a very low decline rate of less than 2% based on the last 10 years of production. So that's the principal asset. But what we've also been able to do is acquire a very large data position in Upper Austria, and Paul will explain what that means for us in terms of exploration potential.
Okay, thanks a lot, Ian. When we had these one-to-one talks this morning, a lot of people said this is too good to be true, the acquisition of the oil field producing 1.5 million barrels. And yes, that's right, because we also have to take some exploration. But the exploration is not punishment, as I hope to convince you. It's actually quite exciting. Austria has been probably a producer which is not well known to a lot of people, but it has about 30,000 barrels of oil a day equivalent production, out of which 57 actually gas, which is quite good. Royalty regime is quite good, 20% in Austria. We've got a refinery which can do about 200,000 barrels of oil a day. And if you think what has been produced in Austria, you'd probably be surprised if you don't know the country, about 1.2 billion barrels of oil in the Vienna Basin and 230 million barrels of oil equivalent. Larger part is gas in Upper Austria. So that's the exciting part. And ADX has essentially the western part of Austria, north of Salzburg. There's a little map insert where you can see Salzburg if you've been on holiday there. And they have been told by their shareholder recently, no more exploration, no more production. Wells have to be drilled. We become a gas storage company, and the rest has to go. And that's essentially why we are here. The first part which went is the Upper Austria field, which we have got, and the Lower Austrian fields will be on the market very soon as well. And we also have the exploration acreage around it now. And I'll show you a little bit about the exciting thing here. This is a zoom-in version. You can see Salzburg, you can see Germany on here, Passau and Linz, some of the Austrian names which might be familiar to you from holidays. North of it, as I mentioned earlier, you've got around 230 million barrels of oil produced already, 220, sorry. 70% of is gas. And the interesting thing is that you've got a lot of different play types in the area. If you now look at an exploration picture, this box in gray, these are 3D seismic boxes. ADX has spent around $100 million recently, last 10 years. More recently, a lot of 3D surveys, and now they are not allowed to drill. They've got about 8 rig sites, so drilling sites ready already. 2 of them have been abandoned pre-drill. So strong was the command from the new shareholder to stop exploration. And we've now picked up for, of course, a reasonable amount of money, the entire 3D, the exclusive rights to it. And we also, and I can't show this to you yet because the process is ongoing, we also have picked up a large part of exploration rights where we will be soon drilling wells. The word soon is very important because you walk into an area which is ready to drill, which has 3D seismic. There's no permitting necessary anymore, no licensing round, no acquisitions. And last not least, the most important message is you have an area which has a working infrastructure. So a lot of our prospects are actually more or less appraisal or / almost development step-out wells with very easy and quick tie-in opportunities. Of course, in the southern part, in the northern calcareous Alps, you can play the big game. There are gas potential anticlines around, almost like Monte Alpi in Italy, which can hold half a TCF to a TCF of gas. It's not only a dream. I've been 25 years ago as a drilling vacation trainee in one of these wells, and they, by incidents, found well in the shallower overthrust nape. So everything is in there. The low-risk exploration portfolio, there's a little box in here, is in the order of 62 million barrels of oil equivalent. And there's, of course, the lead which is not a frontier only, but it's proven with other wells, Grünau and Molln, has in the order of 1.3 billion barrels. So that's quite a significant part. I've already mentioned the infrastructure in there. There's just a picture to it. So everything apart from a very few southern calcareous Alp prospects are ready to tie in. And the other important message is this is something you not only can drill and discover very quickly, but also very quickly monetize, because there's a gas market which has got European gas prices, very quick to tie in. If it's oil, then there's a direct train line to the refinery in Vienna. So that also goes very quickly. That's why I call this plug and play. The impact of RHG is, of course, significant. That's why I only talked about RHG to us, because, first of all, we have got a highly profitable, very clean, very low CO2 and zero CH4 emission oil field, which is quite important because European Union will impose soon border carbon taxes. We've got a sustainable business which develops cash flow, and we also have a sustainable business in terms of synergies with Romania. As you know, Ian mentioned the discovery we had recently, which already has been tested in the past successfully. We've added more reservoirs, and that will be tested in 2-3 months' time. And also, we have potentially then the financial strength and length in terms of production from Austria to get our offshore assets commercialized, especially Italy, when the 18 months ban will be lifted in August next year. That's it. Thank you very much.